What is going on, everybody? It is Chris with Life 180. How's it going, my fellow cash flow hackers? Just wanted to hop on here. Haven't touched on this subject over the last couple months with all the updates of the CPI, the inflation rates, all that stuff. So I spent some time going through the report, spent some time doing some research on the current numbers, kind of taking a look at ultimately what's going on in the world right now when it comes to inflation, when it comes to your money, when it comes to what do you have to be doing right now to make sure that you are protected from inflation with your personal finances, with your investments and all that stuff. So as I get into this, what I'm going to do is go through the PDF from the Bureau of Labor Statistics. They launch the report every single month, about the CPI numbers and all that stuff. And so what I want to do is I want to go through that a little bit, but I'm also going to talk a little bit today about ultimately what your investments, how to inflation proof your portfolio, because I'm also going to go through a little bit of the history of inflation as well. So actually, I think I'm going to do that to get started, is go through here. Let me pull something up here and bounce this around. So I think this is really important for people to see. So what I want to do is I want to kind of show this. What I did is I found this this program that had inflation rates from I pulled 1970 through 2020. You can see right here. So if you look at this, I'm going to go all the way back. I just want to take an evaluation of the 70s. So check this out. So the 70s, you could see 5.7, 4.4, 3.2, 6.2. If you don't know this is coming off of Vietnam, which I'm sure most people know. And it's coming off of leaving the gold standard, meaning Richard Nixon basically took us off the gold standard. So our dollar bills stopped being backed by gold and silver, right? And so what happened was we had, for the first time in our country's history, the ability to print money without having to back it by some sort of physical reserve like gold, right? And so inflation, you can see here, 6.2, 3.2, 11, 9.1, 5.8, 6.5, 7.6, 11.3. And then in the 80s, it continued a bit. And so here's the challenge, is that, the Federal Reserve always says they're trying to go for 2.0, a 2% inflation. That's kind of their target inflation that they're going for. And I want to be clear with this. I'm not a big fan of inflation, but there are certain elements of inflation that are positive, because inflation forces things to go up in value. I mean, that's really what it does, is it basically is debasing the value of our currency. So the challenge is inflation ultimately is a transfer of wealth. If you're not accounting for inflation, then the people that are going to be taking advantage of that. So, I talk a lot about the importance of investing for cash flow. And the reason for that is because, listen, if you were investing, in 1970 through 1979, look at these numbers. Let's just say this is the part that really drives me crazy with people that are just oh yeah, buy and hold the S&P 500 because it's an 8.3% long-term average since 1925, and that's all good. Well, guess what? If you're averaging 8.3% over this decade, right? You're not getting 8.3%. That's not your actual purchasing power, right? It doesn't matter how much money you have in your retirement account. What matters is how much money, or what that money will do for you, what lifestyle that will create for you, what it will buy for you, how it will pay your bills, so on and so forth. And so you have to understand, if inflation was 5.7% in 1970 and you earned 8% in your account, well, guess what? That's only a 2.3% real growth of your money. And so if you're looking at the results of that, it's no wonder people aren't getting where they need to go. I did a video last week. If you haven't checked it out, I'll link it right above here in the replay. I don't have it here, on this live, but I'll put a card to it up there. Click on it, go watch it, because what's happening is if you look at, I'm trying to think of how I want to phrase this. If you think about somebody who is planning for retirement over a 35-year period, right? And you take a couple, and I'm just going to talk about this real quick. You take a couple that earns $150,000 a year, and they follow traditional methodologies of saving and retirement planning. What they're doing is they're saving 10% of their income, which is $15,000 a year. That means their lifestyle is $135,000, right? So 35 years from now, at a 2.5% inflation rate assumption, which, by the way, look at these numbers. If you were in 1970 and you were planning, it's going to be way worse than 2.5%, right? Over that period of time. You know, granted, the market might have done 9% or whatever because it was a pretty bull market. Inflation's been pretty low over the last decade. But if you look over a 35-year period at 2.5%, that $135,000 of income is actually, of lifestyle, you're going to need $320,000 to account for it. So if using the 4% rule, you got to be able to amass a nest egg of $8 million to be able to sustain that, right? I don't know about you, but to me, that's not really a sustainable number, right? Like $8 million for a family earning $135,000 is not just, it's just not a realistic objective. It's not a realistic goal or attainable goal for them to achieve. And so that's why people are failing. And when you actually look, and I'm going to go back here, when you look at these inflation numbers, you know, it's one thing to say, okay, yeah, if we're going to get 8% long term, inflation has been really, really low or really high during these periods. 8%, you actually have a negative purchasing power return with an average S&P return. Now, if you jump ahead here from, you know, the last decade, you can see inflation is at actually far lower than most people would expect. And you know, the crazy part is during that time, we actually, you know, printed more money. We, you know, had a lot of things happening in the world that would actually make you think that inflation would be higher. We've had tons of quantitative easing. We've had tons of money printing. We've had tons of things going on. And the reality is, I'm a big believer right now that we're just kind of kicking the can down the road on this, and COVID has forced us into some bad situations, and now inflation is starting to tick up. And while the Federal Reserve and Jerome Powell, they say it's all transitory, meaning that this is just, it's completely directly related to COVID essentially, and that they've got it under control. Nothing could be further from the truth. This is not under control. And so let's check this out. I'm gonna go into the, this is the, this month, October 13th, they released it for the Bureau of Labor Statistics. This is the inflation report. So this is what I want you to kind of take a look at real quick here for the numbers that are going on right now. You can see here, this is last September and this is this September. So if I go up here, all inflation is 5.4% seasonally adjusted, before seasonal adjustment, right? So 12 months, so year over year, 5.4%, I can't talk today. 5.4% increase in inflation, right? So when you look at that, you can see here that it started jumping up in January, or I'll say February, because, you know, think about it this way. If our target is 2%, that means between 1 and 0.2%, right? Because a 0.2% annualize that over 12 months is going to be 2.4% inflation. So anything over this 2.2 number is potentially really negative, right, in the economy. And so for me, I look at last year and I look at the holidays and Christmas, and you know, nobody was traveling, nobody was spending. This year things are going to be back to normal, things are going to be kind of moving again. I am fully expecting, you know, those numbers to go up because listen, I travel a lot for work, and I can tell you I'm starting to feel it already. Like I go back and forth to Florida a lot for work. I go back, you know, East Coast, West Coast kind of stuff. And I could tell you, even 5-6 months ago when I was buying plane tickets, those plane tickets, I could get to Florida for, you know, and I took the same flight all the time, and it was like $70 each way, right? Which is really, it was awesome, you know, for me. But what happened was, because of COVID, they had to reduce the price of plane tickets, right? Because nobody was getting on a plane, and in order for airlines to stay in business, they had to do that. Hotel rooms, same thing. You know, gas prices came down because there's supply and demand. Nobody was driving, right? Like all these things were happening. Well, so what that do is that suppressed prices, but the economy wasn't healthy to begin with. So now people are coming back to work. They're pumping more money into the economy. That money is moving. There's this thing called the M4 money supply, which is basically, it measures the velocity of money. And the velocity of money, the movement of money is happening much, much faster right now. And so that's going to push inflation up. And you take take into consideration that all this stuff, and I'm gonna get into some details here, but when you look at the numbers here, the 0.2, 0.2, 0.1, 0.2 for September, October, November, December, and that was of 2020, that, you know, and I'll even say January of 2021, these numbers are going to get way worse. So what I fully expect is to see this 5.4%. My guess is that's going to climb pretty significantly, probably to the 6 to 6.5 range. You know, and so we're going to have, if you go back to this, 6.5%. Let's look and see when's the last time we had 6.5% inflation. I'm going to just keep clicking up until we hit even 6% inflation. 1982. So I was 2 years old the last time that we saw the level of inflation that I think we're going to wind up having this year. So that's 39 years ago, guys. Like, that's a pretty gnarly number. So I'm going to hop over here really quick and I'm going to see if I have any comments or whatever. All right. Hey, Cole, what's going on, man? So it's pretty crazy, you know, when you look at this. You know, what I'm going to do now is I'm going to go down through this and I'm going to share with you just some things that I've picked up. And this is a cool little graph that just shows, you know, the trend of inflation, and it's gone up here. And you can see, I think this is, we're going to see more of this coming in, I guess, coming down the pipeline. So check this out. So this goes through item by item. This is how detailed this is. Now, these are the areas that I just wanted to bring to everybody's attention. I can't highlight it on this app, but here's the deal. If you can see here, there's the energy, energy commodities, gasoline of all types, fuel oil, which is like heating oil for your house, right? Energy services like electricity and utility gas services. Like, check this out. I don't know about you. I was born and raised in Vermont, and in Vermont, heating oil is a big deal. It gets really cold. I know through the Midwest and the northern part of the United States, it's a big deal. I know where I live now in Arizona, the summertime is a worse deal. But the bottom line is the majority of America lives in colder climate right now. And the bottom line is, look at this, like fuel oil right now, year over year, 42.6% inflation. Meaning if it was $1 a gallon, it wasn't, but if it were $1 a gallon in 2020 for you to heat your, for fuel oil for you to heat your house, it's now $1.42.6, right? Like, it's $1.42.6 per gallon for you to be able to be able to buy a gallon of heating oil for your house. And so think about that. You're like, if it used to cost you $200, it's now going to cost you $284. That's a huge increase in that expense. And gasoline, the same thing, 41% increase. Energy, 24%. Electricity is only 5.2, but that's still pretty significant. Pipe gas services, 20%. Used cars and trucks. Look at the inflation in the used car and truck market, 24.4%. A lot of people saying right now, I actually read a consumer confidence I guess, report the other day, and they were talking about how people, one of their greatest concerns, people are concerned they're not going to be able to buy a new car, and people have never been less confident about their ability to buy a newer used vehicle. And look at this, new vehicles, 8.7% inflation, pretty crazy, and used vehicles, 24%, which shows that people are going, because listen, when the economy is good and when people can qualify for cars, that's when they go to the new car market, right? So just think about the supply and demand of this. If the economy is healthy, if you have the income, if you have the credit, and unfortunately, because of the way COVID was, people had a lot of deferrals, people put a lot of forbearances into play. And so what happens when you do that, you actually lock up yes, it's convenient at the time, and there's a lot of financial benefits if you leveraged it properly. But if you didn't, you're running into situations where, you now are not going to qualify for loans because you need to give it a certain period, usually it's 3 months or so of good on-time payments after the fact before you qualify for more loans. So what happens is, in that situation, people are not qualifying for new vehicles the way that they were before, right? And when people are not qualifying for new vehicles, what do they have to do? they have to jump into the used car market and they have to lower their expectations. So I think that's why, even though the inflation on the new car market is higher than I'm comfortable with, the used car market is out of control high. Like it's just insane. So I always find it funny. They always are just, the government always likes to say, hey, besides food and fuel and energy, inflation really isn't that bad. But actually, like I didn't talk about the food while I was up here, so I'm gonna hop back here. Food inflation is 5.4%. Food away from home, food at home, 4.6, 4.5. So both are double. Like that seems low. It seems, under control compared to the 5.4 overall right now, but that's still really gross. And what I can tell you is this is a number that I foresee to get much, much worse, because what's happened is, restaurants have margins and they don't want to be upping their prices on a consistent basis, right? And so what's going to happen though is they are going to have to increase their prices, because they've tried to, because the Fed has said that the inflation was transitory, they haven't raised their prices because they're like, we don't have to raise them just to reduce them. But now as time goes on, they're going to say, oh my gosh, like obviously this isn't transitory, so we have to raise these whether we like to or not. We can't keep taking it on the chin and eating the margin on this, right? We have to pass it on to the consumer. And so therefore, I think these are areas, this inflation for food, both food at home and away from home, is going to get drastically higher inflation numbers, inflationary. I think the environment is more inflationary than it's been to this point in time, because people are going to start passing that along. The entrepreneurs are going to start passing that along. Now I'm just going to scroll through here and see if I find anything that kind of pops out, any big numbers that pop out. I mean, I think it's really just the food and the energy to me that are the big concerns. Linens are a big issue here. Let me see here. So unadjusted percentage right here. Oh yeah, you can see here. Okay, we're back into the energy space. It's just crazy. Propane, look at this column right here. This is year over year inflation. Furniture and bedding, 11%. Living room, kitchen furniture, 13.7%. Laundry equipment, 19%. People, that's the other thing. People buying furnishings, or appliances for their house, like laundry equipment, washer dryer machine, a dishwasher, a fridge, anything of that nature. Once again, another area where people are just not feeling they have super low consumer confidence to be able to do those things. Footwear for boys and girls, 11.9%. Clothing, men's footwear, women's footwear, all these inflation numbers are out of control. And that is because the supply chains of everything that, have been completely, messed up and just thrown off their tracks. And buying televisions, 12.7%. What's this negative? Sewing machines. I don't know. I don't know why that would be. That's interesting. Consumer information items. Oh, that's interesting. Telephone hardware and other consumer information items, negative 14.5%. Maybe that's because, we don't need to buy a new phone all the time, right? We can just not get the new phone this year. We can, if our phones are good. I don't know if you're like me. I go out and buy a new phone every single time that a new phone gets released. I'm kind of a technology geek like that. Lodging. This is what I was talking about, lodging away from home. Last year, I can tell you for me, the inflation has been much more than 17.5%. So I think that's going to get worse. 19% for hotels, motels, stuff of that nature. Like, these numbers are really real. Car and truck rentals, 42.9%. I don't do that. I only Uber and Lyft personally because I can't stand having to deal with renting a car. But listen, at the end of the day, inflation is coming. And so here's what I want to say is, if you are saving money right now and you are planning for your future, chances are you're putting money, like most Americans, into qualified accounts. You're saving money. You're putting the money into qualified accounts because $26 trillion is sitting inside of qualified accounts in the United States alone. So if you look at the government debt at 30 trillion, 26 trillion in qualified accounts, if you don't know what's going on, most people think of qualified accounts like your 401k and your IRA. They think of those accounts like like a tax deduction, we'll say. But the reality is it's just a tax deferral. And a tax deferral simply means you're kicking the can down the road. You are deferring your need to pay taxes today, and you're getting a reduction in income to pay less taxes today, but you are going to have to pay taxes on that money that you deferred the tax requirement on to a later date. Now, that worked in 1980 when inflation was high, taxes were high, and you could defer in that environment and pay at a later date when taxes were low. But what worked then doesn't work now because we are at an all-time low tax rate environment, if you look historically speaking. And so taxes are going to go nowhere but up, I believe. Inflation has to go up because we've been at low inflationary numbers and they've been artificially manipulating that for such a long period of time. I think it's going to catch up with people, right? It's going to catch up with the country. It's going to catch up with us. So we need to make sure that our financial strategies are in alignment with our goals. And what I can tell you is we launched this new program called Cash Flow Hacking. The whole program's coming out next month. We have a book coming out next month. And, I partner with Cole Snell, and we've got some really, really cool stuff coming out. And here's what I can tell you. The best way for you to prepare for your future and to make sure that whatever environment is coming is that you take your money out of accounts that you have no control of. Take your money out of accounts where you're in business with the government, because make no mistake about it, when you put your money in a qualified account, you are now business partners with the government. I don't know about you, that's not a position, that's not a business partner. I don't want to be in business with a partner who's $30 trillion in debt and has the ability to just say, oh, by the way, we're in business together. I'm really bad with my money, so what I'm going to do is I'm going to raise all the taxes and just take all yours to make up for my mistakes. It's not a business partner I want. So I know people, there are penalties, there are taxes, there are stuff like that, and don't take this as personal financial advice. I want to be very careful about that because, obviously I don't know your situation, but I do know for me, I would be taking my money out of my 401ks, IRAs, any qualified account, regaining control of that money, putting it into assets that create cash flow, control, tax deductions, and inflation protection, because that is ultimately what we need to be thinking about right now. If you are thinking about retirement, you're thinking about it wrong. You got to think about financial freedom, and financial freedom is as simple as thinking about what does it cost for you every month to live? What is that number? What's your freedom number look like? Are you at $10,000 a month that you need in your expenses and lifestyle to be free? Well, now what you need to do is think about cash flow, right? Think about that. And if you invest for cash flow, and if you invest with thinking about that, you don't have this $8 million unattainable number to get to at some point 30 years from now, right? You have this $10,000 number that you can get to. And I'm telling you, there's a system we can walk you through completely predictably to get you there very, very quickly, 4 times faster than you would go through a traditional retirement plan process, right? And so all you have to do is start thinking about regaining control of that money, putting it into these areas where you're going to get appreciation, cash flow. It's going to be inflationary protected. That area is real estate. I'm not going to beat around the bush on this. So investing in cash flow real estate, I'm telling you, there was a period of time where I was not a big real estate fan. Ask my wife, she'll tell you, I fought her tooth and nail on doing it. And then, I remember my first conversation with Mike Wolf. It was like overnight, it triggered with me. That was 8 years ago. And working with Mike now for 8 years, I've realized this is something every single person needs to do. So that's one of the reasons we're launching Cash Flow Hacking, because I see the writing on the wall of what's coming down the pipeline in this country with the world of personal finances. There's no wonder 97% of the people in this country are failing when it comes to their money, right? Like 97% of the people in this country are failing with their money because of the fact that they don't have a plan. They can't hit a moving target. You could take a sniper, right? Literally an Army Ranger sniper. And if they're sitting out at any distance, the longer you make it, the more still that target has to be. This just came to my mind. I don't know. I did not plan for this. So if I screw this analogy up, bear with me. But if you took a sniper and they were really well trained and they have a target, the further distance out that target is for them, the more still that object has to be, because the more that bullet has to travel, right? And there's more variables that come into play. So if you don't have all the variables at play, to know what your target is, meaning what is the inflation rate between now and 30 years going to be? We don't know that. So how can you pick a number? What's the market going to do? You don't know that. So how can you pick a number? What's the economic and political environment going to look like 30, 40 years from now? You don't know that. I don't know that. How can we plan for those variables that we don't understand? So rather than doing that, why not gain control of our money and come up with a plan that puts us in control of the results in our life? And that's what this is all about. So I would really, really encourage you, if you haven't thought about this, really take a deep thought about your current financial strategy and think to yourself, A, doing what you're currently doing, do you know what your investments need to earn on a monthly or annual basis to be able to make sure that you can retire when you want to retire, right? Do you understand how inflation plays into all these different things? I'm not going to go through the whole analysis there that I normally would in a full meeting, but the bottom line is, like, think about that. If the answer is no, then that's a big concern, right? Do you understand how inflation plays into it? Do you understand, how to create cash flow? And if you don't, I would encourage you to go down below, click on the link. You can set up a call with one of our cash flow hacking experts that can help you out. And I know it would make a huge impact in your life, at least give you clarity. So I don't know what else to say on this right now. I just had to come live because I was reading this report. I wanted to share it with people, kind of give some perspective. We are coming up into some hard times here. Inflation is going to get out of control. I think the stock market is a bubble. It's been inflated by money printing, by economic policy, by just by the government just giving money away, encouraging people not to work. There's all these things that are happening. It's like we live in this upside down world where the real world doesn't align with like Wall Street, right? And eventually that catches up with it, right? Like it will kind of reverse course, and there will be a correction. There always is. The further we go along in this bull market, the more likely that we're going to hit a reversal, and the more drastic that reversal is going to be when it does happen. So I really encourage you to go down below, check, set up a call. And if you haven't already, I've got a lot of videos on here. Go check out the videos that I did last week on just preparing and investing for cash flow, because I do a couple really good analogies in those videos about what you need to do and the variables you need to be able to consider to make sure that you're able to invest for cash flow and prepare yourself for the future. So anyway, I hope that helps. I hope you have a blessed, inspirational day, and I look forward to seeing you guys on the next video. Take care.